Good morning, everybody. Hi, my name is Darius Anucauskas, and I'm a global market analyst here at Markets.com. And today is Friday, the last kind of trading day of this week, but the first Friday of the month of May. Look, we have a busy day today. I mean, and of course, everybody's now going to be watching the NFPs, so how those are going to come out. Look, about all this and a little bit more in this webinar, so stay tuned. Do not tune out. Hopefully, you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm a global market analyst here at Markets.com. So, apologies for a technical issue. My camera was not working for some reason, but now it's back on track. Look, I hope you can hear me and see me well. Thank you very much for everybody who's watching this right now. As always, like I said, we're going to talk about markets, talk about fundamental and technical analysis, what's happening in the market right now, what kind of economic data sets we should be or we should be expecting to come out, which ones already did come out and how they have impacted the market. So about all this and a little bit more, of course, in this show. But before we jump any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'll also put a nice good morning in the chat room, everyone. Good morning, everyone. There we go. I hope nobody's going to beat me to it. Yep, I always have this game with the people who are watching. You know, who's going to be the first one who's going to put good morning in the chat room. There we go. Also, look, today we have, like I said, a special day. You know what? Before that, let me just mention quickly our Markets.com website, which for some reason is not showing up. Let me just see what's happening here. Nope. There we go, ladies and gentlemen. So apologies again for these little technical issues, because again, for some reason, the settings sometimes get kind of disbalanced and, you know, get moved a little bit. So okay, now I think we're now looking good. So yes, as I said, good morning, everybody. So yeah, like I said, get this quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So now then, ladies and gentlemen, there we go. The chart, the first one, Nikkei 225. So this is the end of the week, and if you have been watching me from Monday, basically I said to everybody, we were holding on here, we were holding slightly below this 50-day EMA here shown as the green line, and I said to you that, look, I'm still cautiously bullish and I'm still aiming for the upside. My next target is this downside line taken from the high of the 24th of January, and this is what we managed to reach. So great result. I'm very happy with this, this is where, like I said, this is what I've kind of I was targeting for. Now, of course, at this point, we're looking at this downside line. We can see that it has been violated a few times. Oh, by the way, I can see that people are tuning in right now. So hey, everybody, thank you very much for tuning in. I really appreciate your time. Just to kind of, you know, casual hello would be nice. Not saying anything, but look, everybody, let me know where are you tuning in from. You know, what's your name, where are you tuning from, and yeah, we'll go from there. So thank you very much, whoever is watching right now. I really appreciate your time. Look, so this has been accomplished. Like I said, this idea has been met. The targets of this idea have been met. So I'm very happy. But now the question is, can we see this forming, this arrow which I've drawn here? Now, what I said to you before, that look, this downside line could be a little bit in the way, and also together with this downside line, we have the 100-day EMA, which is providing fantastic resistance, as you can see here. This line, the 100-day EMA, is shown as the blue line, if you can see it here. So it's providing fantastic resistance. The next question, I mean, can we clear that? If we can, then yes, I'll go a little bit more to the upside. So I'm going on this one slowly. I'm going step by step, not really rushing into anything. And yeah, so I'm not also excluding the downside scenario, because again, look, if this downside line holds, we could see a drift back down. However, for me to get a little bit more comfortable with the downside, I would probably wait for a drop somewhere below this 50-day EMA shown here as the green line, and then we'll go from there. Let's have a look at the economic calendar, what has been happening so far in Japan. Let me just see if I have Japan. Yep, I do have Japan here. So just a quick recap. So Monday, Tuesday, there were no major events or anything like that. On Wednesday, sorry, we did get the retail sales numbers and the preliminary industrial production figures. So retail sales came out very nice. The year-on-year figure came out at 3.1 against the 1.3. So that also helped move the stock market a little bit higher. Industrial production, the year-on-year number did drop a little bit. Well, okay, that's the preliminary. That's not the final yet. So hopefully the final one can recover a little bit. Now, Thursday, going into Thursday, GBPUSD Bank Manufacturing PMI number, the final one. Cannot see any result here. Let me just refresh the page. Maybe that's why it's not showing up. Could be the case. Where's that Japan? Where's that Japan? No, still don't see the number here. Okay, that's fine. But either way, I think that wasn't the epicenter what's the word for that? Not even the epicenter, really. The main event for that day, the BOJ interest rate decision. That was the main one. So we saw the interest rate coming out the same as previous, and I mean that's in line with expectations. To be honest, nothing major there. And we saw the Japanese yen, of course, weakening a little bit. So look, this is something that I said in my newsletter, in my monthly newsletter about Japan, that for the BOJ right now is in a difficult spot. The BOJ right now is in a difficult spot, and they kind of need to balance between either like supporting the economy with lower rates, or not going for a rate hike as they want, or actually going for a rate hike, but then saving the Japanese yen, but then you might be damaging the stock market, the economy, because again, we're going through right now times where there's a lot of uncertainty, and the market's confidence has been shaken. And this is where like I said, every central bank now has a little bit of a problem in terms of how far can they build their policy and make their policy, or how far they can look at. So, and this is, like I said, the same problem is for the BOJ. The BOJ is trying to go for those hikes in order to kind of keep the Japanese yen in line. But of course, the recent market decline did help out the Japanese yen just naturally, because again, everybody jumps into the Japanese yen when the times go down. But now the stock market has been picking up, and we're seeing Japanese yen kind of weakening a little bit. But I'll get to that in a bit. First, let's deal with all the indices. And what we're seeing here is, like I said, it looks like there could be some more positivity, but I don't want to rush into things right now, because this is a good area of resistance. Maybe a little bit of a retracement could be possible, so I'm not excluding that. And but my preferred downside scenario is on a drop below the 35,111 zone, somewhere around here. And excuse me, if we can drop below this hurdle, I'm going to go a little bit more to the downside. Let's have a look at China 50. Yeah, okay, look, yesterday the market was closed. I mean, today I think the market is closed as well, but it shouldn't be. Yeah, let's have a look at that. Let me just double check something here. Where's that Shanghai? Yeah, the market is closed. Apologies for that. So yes, Qingming festival. Right. Okay. Nevertheless, we're gonna have an interesting moment on Monday, in my opinion, because again, sorry, not the Qingming. The continuation of Labor Day, and then Monday as well is going to be closed. So China will be back on the 6th of May. So yeah, look, what can I say here? At the moment, I'm still considering something like this. So I'm not really getting very bearish because again, we remain above the 200-day EMA. But in general, if we somehow climb back above all my EMAs here on the daily chart, I'm going to get a little bit more excited with the upside. Dow Jones Industrial Average, good result. Good result yesterday in a way-ish. I would say, well, why I'm saying good result? Because it's good that it remained in positive territory. So looking at the cash index here, you can see that we have nicely climbed above my downside line, this one, the shorter one. I talked about it on Monday. I said to everybody, look, keep your eyes on it. If we clear it, my next target is the 50-day EMA here, shown as the green line, together with this downside line taken from the high of the 20th of February. Now, it's a beautiful hit, it's a beautiful touch, so I cannot really complain. Mission accomplished. What's next? Well, next we're gonna do this. Basically, we're gonna go slowly on this, step by step. So if we do clear the 50-day EMA, I'm gonna go, at the same time, we'll clear the downside line, and then I'm gonna go for that 200 and 100-day EMA. Simple, honestly. Like, I'm not gonna really invent the wheel here again, but I'm trying to keep it short and simple. We know that there are some issues, ongoing issues, political issues right now, and with tariffs, and that they're trying to remove this so-called the minimis, or like the minis. What's the correct word for that? Let me just double check myself very quickly. The minimis. Yes, there we go. That's basically the duty-free treatment of e-commerce packages worth less than $800. That's in the US. So basically, if they're worth 800 or less, they don't get duty. And that's how all these packages from China, like from Temu and Shane, how they travel into the U.S. Basically, that's why they can be so cheap and they can be so affordable, because they don't fall under duty. But now there is thought that the U.S. president will remove that rule, and that treatment of those e-commerce packages, and basically that could kind of raise a few issues here. Now, first of all, inflation. So there is this thought that maybe it will actually push inflation a little bit higher. People will be able to afford less. And the cost, okay, everybody will try to, the whole point is you want to try to force to buy local, right? Okay, now let's not forget that supply is still on the limited side, and you're gonna force everybody to buy local. That's fine. Okay, you're gonna buy that, but then all the retailers will understand, okay, look, everybody's buying my products, I'm going to ramp up the price a little bit. So, and that's how you're going to end up having inflation. So not only that, Federal Reserve will have to kind of consider not cutting for longer, but they will probably have to consider hiking at some point. But look, at this point, let me just refresh the CME Fed Watch tool. At this point, we're seeing that yes, on 7th of May, we're gonna get we're gonna get no cut. That's that's something that Mr. Trump is not really happy about, because he wants Jerome Powell to cut interest rates. But again, you're gonna lead to more. This could lead to more inflation. At the moment, inflation is kind of sustained in the U.S. Where's that? In the U.S., inflation right now is around 2.4%, the headline year-on-year figure, which is fine, which is around, like I said, the Fed's inflation target of 2%. Which, like I said, all is under control for now. But if you're going to drop rates, if you're going to limit Chinese goods, or not only Chinese goods, there are goods from all over the world, but you're going to limit the possibility to buy cheaper goods from abroad, then unfortunately I don't see it any other way of then it's going to lead to higher inflation, unless you're going to really subsidize it initially. But I mean, come on, that's just going to be printing money, and then it's going to lead to higher inflation later on. So, that's what I'm saying. So for now, the market is recovering. That's absolutely fine. So it's because until we're still in that little period of limbo where there could be some negotiations done, and not everything is straightforward, and that's where like I said, the market is you're thinking, what, we need to recover a little bit more, and then we'll see. So at the moment, I think that we have done the recovery that I was hoping for to see. Now the question is what's going to happen with these EMAs. I'm kind of maybe leaning a little bit more towards the upside, but only up until the 200 or the 100-day EMA, and then we'll go from there. The S&P 500. So, by the way, we'll get to the U.S. economic news in a bit. Just let me go through these first, and then I'm going to jump into the economic calendar. The S&P 500, good result here. So far, so good. I talked about this. I said that my targets are these EMAs, the 200, the 100. Well, we meet my target, so now I'm just chilling. I'm just taking a little pause, and I want to see if we can, if we can clear those EMAs and travel towards that 5,786 territory marked by the highest point, or should I say the high of the 26th of March. So this is going to be my next target for now, but in general, I'm not really excluding the downside scenario. Oh, excuse me. Sorry, my cold is moving away slowly. Actually, I wish I could go a little bit faster, but what can we do? But anyway, so look, the downside scenario, I think that the better option here is to wait for a drop below the 50-day EMA. I don't really like any other level here. I mean, we can try to put something like what I just did, but it's just going to be a little bit... Okay, everything is subjective, but even more, this could be even more subjective. So that's what I'm saying. So that's why for now, I'm just going to keep an eye on my EMAs, where we're currently getting a little hold up. NASDAQ, so so we did a good move here, 61.8% on the Fibonacci retracement, which is drawn from the highest point of February to the lowest point of April. We did a nice little recovery, that's fine. We're holding near the 100-day EMA here, shown as the blue line. We're holding near the 61.8 here as well. So all is good in a way. This mission has been accomplished. Now my next step is something like this. So if we do clear the 61.8 here, basically if we jump above the psychological 20,000 zone, now that's where the excitement could come, and we could actually move a little bit higher. We could aim for that 20,335, or maybe even better, 70.5%. And then we'll go from there. In terms of the downside, now again, the same story. I would prefer to wait for a drop below all my EMAs, but maybe additionally to that, a drop below the 19,250 territory, somewhere here, which is near the 50% retracement in the Fibonacci, could be nice. Like I said, this would be my preferred downside scenario. The only problem that I have with that downside scenario is this upside line, which could be a little bit in the way. However, if that gets cleared as well, look at this. I mean, this could be opening the door to some much, much lower levels. Now, as promised, let's have a look at the main event today, which is happening, and that is the U.S. job numbers, and mainly the U.S. unemployment figure, together with the participation rate, and the non-farm payrolls, which are expected to come out on the much lower side here. The unemployment rate, 4.2? Now, this is going to be interesting. If unemployment rate somehow comes out at 4.2, or actually, you know what, let's put it this way. If it comes out at 4.3 or higher, I mean, that could be maybe a little bit of a signal here for a little reversal on the U.S. indices. Non-farm payrolls, again, similar story. This 130, we're expecting a much, much lower number. Let's put it this way. I mean, if we do somehow drop below the 130, yes, I'm really considering a move back down. But if we do come out, let's say, higher than the forecast, but lower than the previous, and again, we're also going to be looking at the adjusted number, because don't forget that the 228 here will get adjusted. The question is how, to which area, which way will get adjusted. Now, and like I said, that's why if it comes out somewhere in between here, in between these two numbers, I kind kind of expected the little retracement like this, and then maybe a bounce back from the 50-day EMA here, and then push higher. And I'm talking about the NASDAQ here. Again, similar story with other indices, maybe a little bit of a retracement back down, and then kind of push higher. So keep that in mind. Let's like I said, let's see if this is going to be true or not. But again, I'm not really at this point. Look, my targets have been reached. Today's Friday. I don't want to overdo it. I don't want to overdo it because again, it could really, backfire very, very quickly. So that's what I always suggest to you, everybody. Just kind of be careful, be cautious. If you have already, you have already a good week, then just if not all your boxes are ticked, don't touch. Do not touch. I'm looking at the companies that have been reporting this week. Visa, Coca-Cola on Tuesday. Those showed good numbers. On Wednesday we had Microsoft, Meta also showing good numbers. By the way, let's have a look at Meta. The Facebook here. Yeah, good result here. Nice pop here. Okay, in a way there is a chance for this one to push a little bit further north. MSFT, let's have a look. Beautiful jump. Look at that Microsoft. I mean, fantastic result. Everybody, yeah, I mean, what can I say? Good, really good result. And most importantly, this jump brought Microsoft back into positive territory for the year. Look at this. At one point, we were dropping almost like 19%. And then we reversed, and then look at this. Boom. Fantastic move. What can I say? I think that's great. I think that's a wonderful result here. And yeah, I think that this could actually travel a little bit more to the upside here, especially if it stays in the positive above the entry level of this year. If we can continue to trade above that entry level, we basically still remain in positive territory, then yes, we could go a little bit more to the upside. Let me just check something here. Now, I'm doing technical analysis on the stock, but to be honest, I mean, I strongly recommend all the time just kind of go from the fundamental side instead of the technicals. You can support your fundamentals with technicals, but not, the other way around. Now then, and today, Thursday, yesterday we had Apple, and Apple was reported earnings, good result in a way. Amazon was a little bit hit, so they reported numbers, not bad numbers, but still, they're struggling right now at this point because again, with the same story with the potential removal of that 800 duty-free amount. Yeah, that's something that the market needs to be careful about, and especially this company needs to be careful about. Let's have a look at the by the way, MasterCard yesterday. MasterCard good result. MCD, McDonald's good as well. Now today, what do we have today? Today we have basically energy companies performing, so or releasing their releasing their numbers. ExxonMobil, there we go. We're waiting for the numbers here. CVX, also Chevron. Yep. Well, look, if it wouldn't be for the earnings, I would say looking at this technical picture, I'm kind of leaning towards the downside. This looks like a little bit of a bearish flag, but hey, again, like I said, this doesn't actually move all the time the same way as we expected, to move in other asset classes like forex and commodities. So coming back to the situation with the dollar index or the U.S. instruments here. So look, this is perfect. This is what I talked on Monday. This is what I talked on Wednesday. I said to you, look, we could be possibly having a nice little inverted head and shoulders pattern, but we need a break of a neckline. Potential neckline. There we go. We broke that neckline and we pushed higher. Then I said to you, look, I'm going to watch this upside line. Look at this. Look at this perfect action, honestly. And we held nicely, and we drifted kind of, we held here below this upside line, and now kind of it's opening an opportunity for this idea to work out. But I would say this way that I would prefer actually to see a drop below this this downside line, the so-called neckline of this little formation, and if we in roughly below the 99.24 zone, somewhere around here. If we do drop below that, great, wonderful, I'll go lower. However, my preference right now is more to the upside, but again, to the upside, I mean for a larger correction to the upside. Now look, if the NFP comes out somewhere, let's say above forecast, but still below, let's say the previous figure, then I really doubt that this is going to be negative. It's now, this instrument is now like trying to capture, or traders trying to capture on any positivity that's possible, to any little small positive thing could, help boost the US dollar here. So that's why if we do come out, let's say, yes, lower than the previous, but above the forecast, then that's, that's great. Could be great for the US dollar. And we could see a pop here above this upside line. That's what I need. I need to see a pop, and then I'll go for a larger correction to the upside. DAX, the German index, there we go. I mean, this is unstoppable. Look at this. I mean, this is just an animal. I mean, wow. Look. I talked about this. Okay, Fibonacci, first of all, it worked initially, but no longer needed. This is just traveling fantastically to the upside. And look, I mean, where's my cash index here? There we go. This is I prefer this one. So we are traveling beautifully to the upside. And after we found good reversal here at the beginning of April, I mean, look, the beginning of April looked like a tragedy, but this is what, this is how politics work, and this is how, one-man show works, and just he backed off a little bit. There we go. Boom, back to the upside here. The question is, which one's the all-time high? 23,477, 23,477. This one was the all-time high. So this one was the all-time high, reached back in March. Okay, so to be honest, I'm not really excluding the possibility now to see a move all the way back to the all-time high. Where's that start of the year here? So this is the candle, this is the entry. Now we're currently doing around, 14%? The maximum that we did this year, the gain was around 17.6. That's what I see here on my cash index. And can I say, this is, like I said, this is just, I think, like I said, it's difficult to find a possible reversal signal. I don't know, like you can look at the areas here, you can look at the, the all-time high here, but look, this was a good area of resistance, that was a good area of resistance, the 22,716 zone, but I think that's all, like, doesn't matter now. I think that until we see a candle, until we see some sort of bearish activity, then yeah, we could see, like, we could start considering the downside. But at this point, yes, I'm leaning more towards the upside. However, if you would ask me, like, would I go in? No, of course not, because I don't like this. It goes against my strategy. It goes against my logic. If it's that high, if it didn't have like any retracement, I mean, at some point it will have to reverse, and the reversal could be painful. And that's why I'm just gonna observe it. I like to watch it. I mean, great, wonderful, but just like I said, I just don't really feel comfortable with this right now. Very quickly on the FTSE 100, beautiful rebound. Look, this one is showing the perfect image, basically. I said before, and I have this theory, I talked about it, that whenever we break a trend line, we tend to revisit it from the other side. And in this case, we broke a downside line, and now we're kind of revisiting from the from above, rebounded, pushing back to the upside. So far, so good. I think this could be, this could end up traveling higher again, but again, if it somehow falls back below this downside line, by the way, I need to make a few adjustments here. Yeah, if it falls back below this downside line, and I'm going to take a little bit of a conservative approach here. I'm going to wait for a drop below 200-day EMA. If that's going to get cleared, amazing. More sellers here could join in. Ladies and gentlemen, let's jump into the Forex world. And by the way, if you have any questions, honestly, drop them in the comment box, and we'll go from there. If you want me to look into an instrument, then I will pick up on that as well. Basically, I have a structure that I go through. First indices, then Forex, then commodities, and then cryptos. So yeah, I'll pick up on all those in a bit. So AUDUSD, I'm loving this one. I'm watching the NFPs very carefully because again, this is AUDUSD. And if you're looking at the, like I said, the upside scenario here, I think that the better option here is just to wait for a push above the highest point of April near the 0.64 kind of 50. And then we'll go from there. If we can get that nice clearance, amazing, more buyers could join in. For the downside, because we currently are still because currently this Fibonacci retracement is still valid, I would prefer to wait for a drop below the 23.6 before, let's say, getting comfortable with the downside. AUDJPY, let's have a look at this one. Beautiful touch, beautiful hit, amazing. That's my target has been reached. I was aiming for this one. And now what's next? Next is basically this question, can we break the downside line? If we can, I'm going to go for that 100-day EMA or this 200-day EMA, and then we'll go from there. But let's not forget at the moment, this, well, not only at the moment, this pair in general is our risk on and risk off monitor. We measure, market sentiment with it. So yeah, it's this pair is showing positivity. That means that yes, the stock market is moving nicely to the upside. I prefer to wait for this one a little bit to see what's going to happen if this downside line is going to hold, but I would probably need to wait for a couple of days here or something like that, because if it starts falling back below the 50-day EMA, that's great. I will consider a bit of a move to the downside. NZD USD. NZD USD, by the way, in terms of Australian data, look, building permits we got from New Zealand, those improved significantly. Wow, I mean, that's nice. Australian PPIs came out, 3.7, the same as expected, and Q on Q, 0.9. Okay, the same story basically as previous, nothing major, yeah. Okay, NZD USD, this 23.6 here is providing fantastic support, so I'm keeping an eye on that one. If we do fall below that 23.6, I'm going to lean a little bit more towards the downside. US dollar against the Japanese yen. Okay, this is what I was talking about in the beginning about the BOJ. So the BOJ did not go for any hikes or anything like that. They just kept the rate the same. So in a way, trying to continue to stimulate the economy. The only problem here is that this could lead to some issues with the Japanese yen. Now, I think in general, the issue with the Japanese yen could start if we see the yen here weakening against the US dollar and going above 160, somewhere there. If it starts clearing that little area, I think I will get very excited to the upside here. I know we're missing out on a little bit of territory here, if I can say, but look, that's from the bigger picture, from the longer term perspective. If we do start clearing this one, I mean, this, like I said, it could be a bit of a devastating moment here for the Japanese yen and for the BOJ, so they will have to do something about it. But in the long term, short term. From the short-term perspective, there we go, managed to squeeze this one out. From the short-term perspective, I think I'm going to still stick to the upside, but only up until this 50-day EMA and this downside line taken from the high of the 10th of January. So this is what I'm going to aim for, and then we'll go from there. And this is also like this downside line. I'm keeping an eye on it because if that gets cleared, of course, this opens the door to some much higher areas. So very simplistic approach here on USDJPY right now. I would, like I said, I prefer to play the waiting game a little bit, and then we'll go from there. For the downside, if you're looking for some lower levels, I think that maybe it's time we could keep an eye on the 144 zone. If that gets cleared, I will consider a bit of a move lower. USDCAD now. I'm loving this pair because, again, this is moving very nicely within my falling channel pattern. And I'm going to stick to that. Now, in general, the whole picture here, the whole short-term picture, paints to me to be a little bit more on the positive side. Because, look, I love this pattern. This is one of those patterns which I keep an eye on very carefully. So whenever we have a clear decline, a strong decline to the downside and then a gradual decline, we tend to then break out higher. So basically, we either form like a falling channel or like a falling wedge pattern, and then it kind of clears the upper side, and then we see a move higher. The only problem here is that you actually have to see that breakout. You actually have to wait for the break of this upper side of whatever formation we have. In this case, we have a falling channel. If we clear the upper side, then yes, I'll consider a move higher. But because while we remain inside this pattern, we could still go lower. In terms of economic data from Canada, we don't really have much. Yesterday, I think we had some data here. S&P Global Manufacturing PMI came out on the lower side, not very good, not very good. And then I think Wednesday it was the GDP, or GDP, the preliminary, the month-on-month came out. That was a disaster. Came out in negative territory. So, of course, we'll be carefully monitoring this. This is not really good for the Canadian dollar in general, for the economy, for the Canadian economy. But hey, what can you do? At the moment, these are the times that we're living through. They're not bad, but they're very unstable. So USDCAD so far, like I said, we're drifting lower. But here the weakness is could be coming in from the US dollar a little bit. But I would say actually, no, you know what? No, I think I'll reiterate that. I'll take my words back. The positivity of the Canadian dollar here is coming from the win of Mark Carney, the former Bank of England BOE governor or chair. He's now the new Prime Minister of Canada. So basically, that's kind of seen as something of a positive thing, and maybe that could support the Canadian dollar, and maybe that's where like I said, the positivity is kicking into Canadian dollar. Yes, we saw US dollar kind of pushing a little bit, ramping up a little bit to the upside, but the Canadian dollar remains a little bit on the stronger side. Now USDCHF, so far so good. Look, I mean, after this major decline in the beginning of April, we saw a nice decline here, and nice decline here, and now we're seeing a little bit of a recovery, so that's absolutely fine. But look, we're still below this upside line taken from the low, the 28th of December, and I'm considering a little bit more upside here, to be honest, but I think we need to be very careful with this upside line. If it holds, another decline here could be possible. Very quickly on EURUSD, seeing a nice little correction back down. So far so good. I mean, what else to add here? Nothing. And I said to you before, and said to you in the beginning, that look, we might see a little bit of retracement here, but if we stay somewhere above this upside line, I'll continue targeting the upside. EUROJPY, there we go, boom. Didn't like the BOJ interest rate decision. But that's absolutely fine. What can you do? This is this is the game we play. And but the game we play, I was talking about this game plan from Monday. I said to you, I'm going to lean a little bit more towards the upside on this one, but I prefer to wait for a pop above the 164.18, something like that here. Basically the high of the 18th of March. If we can, or the highest point of March, in a way, if we can clear that, I will go to the upside. My next target will be the 165 area, and we'll take it from there. Euro Aussie, I'm loving this one, very interesting, but it's breaking this upside line, and this is kind of opening the door to some lower levels, but only up until my EMA. Euro CHF, no, nothing major. Euro GBP, okay, look, I don't like this pair. But look, I still look at it sometimes, occasionally. But what's happening here? It seems like a nice falling wedge pattern forming, a very steep one, something like that. And look, if this is going to be the case, if this is going to be if that's going to be the case, if this is a falling wedge, or a nice bullish flag, then we'll expect a nice pop higher here at some point. GBPUSD, let's have a look what's happening here. So far so good. 1.3434 is providing good resistance, so we're holding below that for now. Look, this is very simple. That's my upside scenario. If we can clear this, I'll go to the upside. For the downside, a drop below the 1.3207 is needed. Let's jump into the commodity world, ladies and gentlemen. Gold, look at this. Gold yesterday, I mean, of course, the US dollar yesterday rallied, and that kind of contributed to a fall in gold. Gold did decline and did correct back down and corrected like by 50% here. Look at this. We did reach the 50% on the Fibonacci retracement, which is drawn from the lowest point of April to the highest point of April. So we did 50%. And now the question is, can we do a little bit more? To be honest, I'm kind of leaning towards a little bit more towards the 61.8 or even better 70.5, and that kind of 70.5 coincides nicely with my 50-day EMA. If that provides good support, maybe then we could rebound. So at the moment we're seeing a decline. I'm not really, like I said, getting very comfortable with the upside yet, because again there are a few ifs that need to be met here. So I would say this way: if we somehow climb back above the 3,292 territory, which is around the 38.2, yep, that's where I'm gonna get a little bit more excited with the upside, in my opinion. Let's jump into silver very quickly. Yes, silver is stuck above these, stuck around these EMAs, the 50 and the 100. So, look, I think that if this is gonna hold, this 50-day EMA is gonna hold, then I maybe just we could see like a nice, push back up here towards this downside line taken from the highest point of October of 2024. That's going to be, I think, my first target. I think that's quite logical. For the downside, we would prefer to wait for a drop below the 100-day EMA, and then we'll take it from there. Let's jump into copper and let's have a look what's happening here. Yeah, not much, to be honest. I think that we need to remove all the drawings and start fresh. Hey, look, it's like I said, it still is on an uptrend overall, but we're seeing recently like a bit of retracement back to the EMA. So we're stuck. I think we're going to take a little bit of a pause here, unless we start pushing back above this little hurdle, back over the 4.96 territory, and then we'll go from there. Oil. So oil has fallen, and I talked about a lot about this, and I talked about on Monday about this, and I said to you that basically we need to see a drop. Well, first of all, I said about this that we are in this rising channel, but it looks more like a bearish flag. So there we go, it all worked out nicely. We cleared the lower side on Monday, continued to slide. I said that if we do fall below the $60 mark and stay below it, yeah, I'm going to lean further south. We did so, and we traveled lower towards the 56 zone almost. And now we're seeing a little bit of retracement, which is fine. But in general, look, if we continue to trade below the $60 mark, I think that, yeah, that's that little negativity moment which could, kick in. So for now, I'm gonna just stick to the downside as long as we stay below the $60 mark. Natural gas. Natural gas looks interesting because look, we're forming this nice little falling wedge pattern. Now, according to all the TIA rules, such patterns tend to break to the upside. If we can get a nice clearance of the of these EMAs as well, then yeah, I'm gonna get a little bit more excited with the upside. But let's put it this way: don't rush for now, because again, if we need some we need to see a daily candle, the body of the daily candle remaining above the upper side of this falling wedge pattern. If it doesn't, then the downside scenario is not off the table, especially if we start falling back below the 200-day EMA. Let's jump into coffee very quickly. There we go. Beautiful decline. Look at this. But we're holding nicely above this broken trend line, broken downside line. So if we continue to trade above that, I'm going to still stay somewhat positive, but I'll prefer to wait for a push above the 411 territory in order to go more to the upside. Sugar. Sugar is dropping like flies, and there we go. Look at this. We're falling. We are creating a historic. We created already a historic low yesterday, and look at this. I mean, we fell below the lowest point of 2022. Now it's like, yeah, it's moving further south, and in a way, there could be a chance of doing that. So let's see if that's going to be the case for longer. Of course, don't forget to look at seasonality. There is, like I said, there are periods when just seasonally that's why it's falling. But again, let's see if we can research this a little bit more. I'll do a little bit more research on this, but I think that it could pick up at some point. And my favorite one, cotton. Cotton is one of my favorite ones. So look, I'm still watching this one. I like it to the upside, but I have to admit that I'm waiting for clearance of, I'm waiting for a push up of all these EMAs first, and then I'll go to the upside. And finally, for dessert, let's have a look at the crypto world. Bitcoin 96. There we go. We got the pop. So Bitcoin is working out nicely. Look, I talked about Bitcoin recently in one of my videos that I did. So yeah, had good viewership. So you can check out my story here on Bitcoin on our YouTube channel and on Markets.com. And yep, so far I think this is working out nicely, and it's traveling. It could still travel towards that 100 zone. So this is what I'm going to aim for. And if we can stay above this little short-term steep upside support line taken from the low of the 9th of April, then yes, I will. My next target will be the psychological 100 zone. Bitcoin Cash, similar story, pushing nicely to the upside, but it's still struggling with that 200-day EMA. That's what I need to see a break off in order to go higher. Ethereum looking somewhat good, but I would say, we need a stronger push here. At the moment, we're not getting that, but it's not really negative, So I need to see a pop above this 50-day EMA in order to get comfortable with some higher levels. Ripple still holding below this downside line. I talked about this precious. Sorry, precious metal. I want to say precious metal. This crypto. I talked about this crypto here recently on our TradingView channel page on TradingView. So you can check it out, and I'm watching this downside line. I need to see clearance of that, and this 2.30 zone is also something that I keep an eye on. I like this one, but I need a confirmation break. I need to see the body of this daily candle kind of pushing and staying above this 2.30 zone in order for me to get comfortable with some higher areas. Litecoin, good result here, good push. There we go, but still holding below these EMAs. So I need to see a push above these EMAs in order to get comfortable with the upside. So that's pretty much it. But for the downside, maybe a drop back below the $80 mark could signal some selling. And let's do finally Dogecoin. Dogecoin is holding near this 50-day EMA. This is a good area of resistance. We need to see a clearance of down in order to consider a move towards the upper side here of this falling channel. And Polkadot is balancing near key resistance near this 50-day EMA. I like this one, and if we can clear that one, I think I will get a little bit more excited with the upside, and I will aim for these EMAs first. So for now, like I said, the problem that we're facing here is the 50-day EMA. We're struggling to stay above it. Ladies and gentlemen, that is a wrap. That is a wrap. Thank you very much. Thank you very much for watching and listening. I really appreciate your time. As always, look, you're always more welcome to to leave comments and ask questions, because that's the whole point of this show. And but if you didn't have any questions, that's absolutely fine. If I managed to cover everything, that's great. But look, join me on Monday, as always, 7 o'clock GMT time, for more economic updates and to see what's happening next week, because next week could be quite an interesting one. Keep your eyes today on the NFPs, because again, if you're trading something, just be careful during days like these. And this NFP number is highly highly anticipated, because then if it somehow drops below the forecast, if it comes out much lower, then maybe this could add more pressure on the Federal Reserve. Let's see how that plays out. So, ladies and gentlemen, thank you very much. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you on Monday. Bye-bye.